Hello and welcome everyone to another weekly market commentary from StashAway, of course, with our Chief Investment Officer, Freddy Lim. Hey, Freddy, how are you?
Hey, Philipp, how do you do?
I'm good. Hey, lots of news over the weekend. We were hoping that the stimulus deal was going to be passed. And I think, by the time we're recording this, it's getting really close. I think it already passed the House. Do you want to give the listeners a little bit of an update on, what they can expect from this and what does it actually entail inside the stimulus package?
Well, some in the US may say that the stimulus package is a joke. Yes, you give a one-time $600 and then a $300 per person paycheck thereafter. It really pales in comparison to what other countries are doing, and it came too little, too late. Most likely, the stimulus package, new ones would probably have to be renegotiated after Biden takes office. But then what the stimulus package really does is to alleviate concern that the government shutdown may actually happen into year-end. As you know, the US government is always on a perpetual shutdown risk because it's some of the most indebted country in the world, and it always is breaking your debt ceiling, the statutory debt ceilings, right? And so Congress tends to lump together the negotiation about raising the debt ceiling so they can, borrow from the markets again to finance it. But the ceiling is always revised up and is always used by politicians as a tool to negotiate. In this case, fortunately, the relief package is lumped together with the government budget, and we averted a shutdown risk in the nick of time. But it is too little, too late for people who's already unemployed for a while. And I personally predict that Biden would have to do more as he took office.
Yeah, so that's probably something to look out for the listeners and investors out there. What's going to happen, starting, January 20th, when we have the official start date for Biden in office. That's the US. Obviously, the US has been hit quite hard on the coronavirus front. Obviously also vaccination has started, right? But we don't just see this in the US, right? We see also huge, we have a mutation in the UK of the virus. So that country is going back on lockdown. Europe is cutting its ties with the UK for the time being, right? And we also see more flare-ups in regional parts of, Sydney has some kind of clusters, right? There's some other countries. How do you see this developing and impacting the markets?
Yes, when the virus spread around a lot, it can mutate. Because viruses would learn from having a lot of data and experimentation on people that to survive, they need to mutate to transmit easier. But doing so would make them also less lethal. So that's the upside in this situation, is that they're likelier to be less lethal, but the strain would be easier to pass around, and it's going to turn out to be like a seasonal flu in the future. The UK cases is the first time that is confirmed the strain is a new strain, and that the mutation has actually happened. So it's the first confirmation, but it probably already has happened in the US and other places, right? And so there's concern that eventually when we get a vaccine, would it still be effective against a mutated virus? So that's one question. The good thing about it is that it's going to be less lethal, right? So all this means that there's no room for complacencies. We do have to manage the current wave of infections while waiting for vaccines to actually arrive at my arm for a shot. But we can't ignore that responsibility.
No, I think it's like you said, right? It's you can't let your guard down, because every time any country has tried that, right, for a little bit, you got the big flare-ups again, right? So I think that's really something to look out for, because we're still in the early stages of the vaccine and supplies are still limited. So let's see how this works out over the next few months. But as Singapore, is a big exporting nation as well. One of the biggest ones in the world is obviously South Korea, right? Yes. And their overseas shipments rose less at a slower pace, for sure, in the first 20 days of December. What does it tell you?
Well, South Korean export figure is actually a well-watched indicator for global trade. It's like a gauge for global trade volume. I remember during Trump's unilateral tariffs all over the places, the trade war, people gauge effect on trade looking at South Koreans' export numbers. And this export numbers has actually improved a little bit, but it's doing so at a slower pace. And there was some fear that the recovery may actually start slowing down and may even reverse. If you look at the numbers, exports to China, South Koreans' largest overseas market, down 2 to 3% in December to date. Shipment of cars fell 3.5%. Oil products shipment also fell like 50%. So there are some areas of concern, and people are sort of very focused on that. I would say that hopefully the start of vaccinations in countries would raise optimism that global commerce will resume. But again, it's a very uneven and could be a drawn out process. We've seen mutation. We've seen vaccine yet to arrive. So it's my view that we're going to be in this very strange situation in a large part of 2021, waiting for the good news to be shot into your arm and yet not getting it, that little gap where you still have to be very vigilant.
Very vigilant indeed. Then final topic, Freddy, before we get to a question from one of the listeners from last week is, what is an update on China? I know everyone is currently looking on these Chinese loan prime rates, right? How do you think, what do you think the telltale signs of those numbers are, and what are they going to show?
Well, people look at it because when they look at the so-called aggregate social financing numbers, in China is a big one. It is broken. You can see that it's like how the entire society, government, corporates, individual, finance themselves, right? That number is huge. And there seems to be a sharp drop in corporate bond issuance, meaning is corporate not issuing money because they don't need it or because they couldn't find takers. So that's sort of the concern, right? And there's a retreat in also longer term corporate loans, the volume there as well. So in terms of corporate, the credit outlook is it sort of getting tighter, and that's sort of got people's attention to the 1-year prime rate. However, it's going to turn out to be a non-event because the People's Bank of China actively manages that prime rate. At the moment, it seems like into the year-end holidays and into Chinese New Year, where there tends to be less liquidity, the PBOC would tend to be a bit more active in supplying liquidity. So that will sort of contaminate the signaling from the 1-year loan prime rate markets. You wouldn't see anything there. So I would suggest instead people look at the underlying lending and borrowing volumes, like bank lending activities instead.
Yeah, that makes sense. Thank you, Freddy. One question we got from the audience from last week that we wanted to address today. I know we had a lot of market news today, but for anyone else, if you have any questions, feel free to put them down in the show notes in the comment section below so that we can pick them up next week. But Simpson Toe, he had a quick question, Freddy, for you. He says, with the vaccine starting to distribute over the world, things might become a little bit better in 2021, right? What are some factors that StashAway considers before going back to pre-COVID kind of portfolios, right? So the different stands in the portfolio.
Actually, I personally think there's no point thinking about pre-COVID, post-COVID, because even if you go back, the vaccine comes and everybody gets vaccinated, does it mean the world will return to be the same? I think it's unlikely because the pandemic has made a lot of changes. Some are permanent changes to how we conduct ourselves. So, for example, technology companies were in the limelight because of pandemic. Does it mean that we all get vaccinated, tech stocks would stop doing well again? It's hard to say because we probably realize that we need more innovations. We need to implement more applications of those innovations, and the world is probably not going to go back to be the same. Whereas in the case of real estate investment trusts, you can argue that traffic volume at the malls would be back to before, and REITs are going to do well again. That's probably a good example of going back to before, but not everything would be. So StashAway looks at lots of factors that does not tell us to go back to the past. We look forward to the future, and we let the data take us to the future instead of trying to have a fixed reference point, right? So we look at growth numbers, a basket of growth numbers around the world. We look at a basket of inflation numbers around the world. We look at a basket of interest rate numbers across different markets, and many other leading economic indices and so on. But also, just to qualify it, also that the market actually disconnected from the real economy this year. So even while the economy start recovering to pre-COVID level, what would happen to the market could be an entirely different thing, because the market was just faster moving. So it's actually a lot more complex than just pre-COVID, post-COVID. We prepare nonetheless based on a large number of data, what they tell us.
No, that's good. A good question from Simpson. I think many listeners were probably asking themselves the same question. So thanks for the insight from you, and thanks for Simpson to ask that question. Thank you, Freddy. We'll be back with our webinars, as I explained on the last video already, in early Jan. So look out for new dates and new topics to come up in early Jan. Otherwise, Freddy and myself will be with you again next week. For everyone, some nice holidays coming up, hopefully. So we wish everyone some good holiday cheer, and we'll be with you again next week.
Well, can I say Merry Christmas to all first in advance? Yes. And if we don't see you before that, Merry Christmas and a Happy New Year.
Yes, exactly. Thank you, everyone. Have a great day. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.